accountant, I'm a business consultant. I am also a tax strategist, and I've been in the finance industry for over 18 years. As a solopreneur, right, or someone who's an entrepreneur. Hello, Five Finance family. Welcome to another episode of the Tax Takeover, where every week we do a deep dive into the tax code and I provide you with loopholes that can save you thousands of dollars, right? So I'm super excited to share with you tonight because I'm sure that you saw the topic of our live for tonight, which is are Tesla tax credits being phased out, all right? So I'm going to share that with you, but I want to remind you that here on the Tax Takeover, we tax plan like the wealthy. So we're going to talk about Tesla tax credits possibly being phased out, but then I'm also going to give you a lot of tax planning bonus tips throughout the show. So make sure that you get your pens and your paper together and be sure to also ask questions in the comment section and we will address them throughout the live tonight. All right. So let's dive into the show. But before we go any further, allow me to introduce myself to those who may be joining for the first time. My name is Samara Andrews, and I am going to be your resident tax strategist for the duration of this show. Okay, now a little bit about my background. I'm an accountant, I'm a finance analyst, but most importantly, I'm an enrolled agent with the Internal Revenue Service. And as an enrolled agent with the Internal Revenue Service, I have an in depth understanding of the tax code. And so I use my knowledge, my skills, my expertise to help business owners who want to continue to grow their business, retain more of their profits, pay themselves a salary, and then finally leave a legacy through the tool of tax planning. So that's what I'm most passionate about, and that's why I come before you every week in the tax takeover to share with you those tools that can help you do just that. All right, so let's dive right into it. I know you're super excited to learn about Tesla tax credits, EV credits in general, right? But specifically, we're also going to talk to the Tesla people, right? So I have some information to share with you. So we're going to walk you through how you can use your vehicle in order to save thousands in tax credits, okay? So again, we're going to start with the EV owners, but then we'll move on to a tax planning tool or tip, I should say, for people that are non-EV owners as well. So I want you to stay until the end so that you can get all of this information and you can become an informed taxpayer, and that helps you tax plan better, right? So for my EV owners, yes, if you have purchased a new electric vehicle, there is a tax credit for you. The Internal Revenue Service has said that you can claim up to $7,500 in a tax credit for a new electric vehicle purchases. Okay. Now, there are some requirements also that you have to meet in order to take advantage of this $7,500 tax credit that the Internal Revenue Service, or I should say, our government has rolled out. Okay. So, the first requirement is that you have to be the sole owner, all right? It cannot be a car that you purchase for resale, right? You have to be the owner that is going to use this car for your personal use, okay? Also, it has to be primarily used within the United States. I know it's probably a crazy rule to have, but it is one of the requirements, okay? And then you have to have an external charging source. And you're probably asking, like, why does this matter? There are some cars that have the ability to have gas, but then as the engine works, it recharges itself. So it has to be a car that has an external charging source. You got to be able to plug it in, okay? Also, the gross weight of your vehicle has to be less than 14,000 pounds, okay? Now, although EVs are pretty heavy, most of EVs that are on the road today weigh less than 14,000 pounds. So just know that the gross weight has to be less than 14,000 pounds. And now this is another one that is tripping a lot of people up. So I'm going to be sure to share some extra information for you. But the car has to be manufactured in the United States. And for the Tesla owners, this is one that's tripping you all up. The manufacturer cannot have sold more than 200,000 EVs in the United States. All right, so when you say that again for Tesla owners, your manufacturer could not have already sold more than 200,000 electric vehicles in the United States in order for you to be eligible for this $7,500 tax credit for your new purchased EV. Okay, so again, that may be the thing that trips up a lot of Tesla owners and other manufacturers who have already met that threshold. All right, but there is some good news. All right, so not only did the Internal Revenue Service extend this tax credit to new vehicles being purchased, new electric vehicles, but they've also extended it to used electric vehicles. But the tax credit is lowered to $4,000. And as you guessed it, there are some requirements that you have to meet in order to take the tax credit for a used purchased electric vehicles. Okay, so one being you have to be the individual who bought the vehicle for your personal use and not for resale. Very similar for the requirement that is for the new purchased electric vehicle as well. Okay, now, secondly, you cannot be the original owner. Okay, you cannot try to say, oh, because I didn't get the credit the first time, sell it back to myself so I can get the credit again. Doesn't work like that. You cannot be the original owner. Okay. Also, you cannot be claimed as a dependent on someone's personal tax return in order for you to take advantage of this credit. Okay. And then you cannot have claimed another used clean vehicle credit in the past 3 years before the purchase date of this current EV. All right. So just know that you have to meet those stipulations. All right. Now, again, there's some more stipulations. They make it a little harder for y'all. And the other stipulation is the income limits. Okay. So, in addition to all those requirements that I read before, all right, the other requirement is your adjusted gross incomes. Okay. So, if you're married filing jointly, right, you cannot have make more than $150,000. Okay. If you are head of household, you cannot make more than $112,000, 112.5 to be exact. Okay. And then for all other taxpayers, your adjusted gross income cannot exceed $75,000. So, in addition to all those other requirements, they also put some income limitations in there for you if you are trying to take advantage of the $4,000 tax credit for a used electric vehicle. I want to make sure I say that, right? And then last but not least, or I should say second to last but not least, the sale of the vehicle has to be $25,000 or less. Again, Tesla owners, right? Usually you can't find a Tesla for less than 25,000. So this may be a problem for you as well. Okay. And then also the model that you're purchasing has to be 2 years earlier than the calendar year in which you bought it, right? So for example, if you are purchasing a car in 2023, then you would need to purchase a model that is 2021 or older, okay? And then you also have the same gross vehicle weight limitation, right? So it has to be less than 14,000 pounds. All right. So some of the same stipulations that you have when purchasing a new vehicle or electric vehicle, I should say, also apply to the used electric vehicle. But there are some other stipulations that are in there that are not required when you're purchasing it new. Okay. It also has to be plugged in just like the new vehicle as well. All right. So just make sure that you are connecting with a tax professional. That is my advice. to make sure that you are meeting all of these stipulations. Again, we're going to be sharing some links with you so that you can go and see if your car would be eligible, because they do have a list of all the manufacturers that are eligible. Because of the changes that happened in the law recently, especially that one of the manufacturer, the final assembly has to be done in the United States. You definitely want to make sure that before you make that purchase, it's going to be something that you can take advantage of this tax credit that has been rolled out for the electric vehicles. All right. So, now, for my non EV owners, okay, you too could possibly write off your car, or write off a portion of your car that you are using for business related purposes. All right. So, in 2017, under the Tax and Jobs Cut Act, the Internal Revenue Service suspended certain miscellaneous items deductions that afforded employees to write off things like their home office, or the use of their personal vehicle for work related purposes. All right. So, because they suspended that itemized deduction for employees, now the deduction for the use of your home office or your vehicle is only for certain taxpayers. Okay. So, this is where you really have to tax plan in order to still be able to write off your personal vehicle for business use. So, certain taxpayers still have the ability to do this. So, if you are a business owner or you are a 1099 contractor, then guess what? You still have the ability to use your vehicle for your business related purposes and be able to write off a portion of those expenses related to using your personal vehicle for business related purposes, right? So you see how I keep saying that over and over again? I want to make sure that I am clear, right, on the stipulations, right? So let's talk strategy now. So the rule does state that you can write off your vehicle for business use if you meet certain requirements, all right? And before we get into the requirements, I also want to make sure that I share with you that you have two options in which you can do this, all right? But you cannot do both. You just have two options. And I say this because recently I have heard that people have been telling other people, taxpayers, that you can do both, but you cannot. You can only do one or the other. So the first option is you can write off your actual expenses related to the your personal vehicle being used for the business. So you can do actual expenses, or you can do a mileage rate deduction. But you cannot do both. Please do not let people deceive you and lie to you. You cannot do both at the same time. Okay? So, if you choose to do like actual expenses that you're going to be writing off for your business, some of those expenses will be things like the insurance that you pay. So, your insurance premiums could be something that you write off. The fuel. So, you put gas in your car, right? For my non EV owners, maintenance costs, right? So, get your tires replaced. If you definitely have your license fees, those are things that you pay every year in certain states, then you can write that off. If you are paying for parking or toll fees, you can write that off. Oh, and if you're leasing your vehicle, you could possibly write off your lease payments as well. So please know that these are some examples of the actual expenses that you can be writing off if you are a person using your personal vehicle for business related purposes. All right. Now, if you are going with the standard deduction mileage rate, right? Please make sure you keep good records and you're tracking that mileage. Make sure that you're using an app that will allow you to track the mileage. For instance, with QuickBooks, I know that QuickBooks has built into their apps an actual mileage tracker. And so when you're going to be driving your car for business related purposes, you just go into the app, you start that trip, and then it's going to track your mileage for that trip. Okay. Especially because most recently the Internal Revenue Service has taken the approach of asking for your mileage to be broken down into 6 month increments. So you have to have your mileage that you use from January to June and then July to December. So it's good if you use the application to track those things. And also for your actual expenses, make sure that you're keeping good receipts, right? So the receipts of your premium payments, your fuel expenses, your parking and your tolls. Make sure that you always have support no matter how you're going to be taking the deduction or the credit. Make sure that you have support to go either way. All right. Now, here's a tax planning tip. I usually advise my clients who are taking this deduction for the business use of their vehicle for the first time. I usually say take the standard mileage rate deduction. And the reason why I say that is because if you do that for the first year, then you can always switch over to actual expenses in the later years. Okay. So you can't do that, however, if you initially take actual expenses as the way to write off a portion of your car for business use, then guess what? You always have to use actual expenses going forward. And most people don't know that. Okay, so that's a tax planning tip for you. So always do the standard mileage deduction if this is your first year, right? Writing off your car, do it that way first. Then in later years, if you want to flip back and forth, you can, right? Because sometimes the standard mileage rate deduction may be more beneficial for you than the actual expenses. And in other cases, maybe vice versa, right? The actual expenses may actually give you more of a bigger tax benefit than doing the standard mileage deduction. So I want to make sure that I give you that bit of insight because many people don't know that, right? That's why I'm the enrolled agent. That's why we have the tax takeover, so I can give you those small tips to help you out. Okay. Now, the big thing that everybody's been talking about is the bonus depreciation rule. Okay. And so, for business owners that are purchasing a vehicle for business use, you have an extra incentive. All right. If you're using this vehicle for your business, and it's called the bonus depreciation tax credit. And this allows you to write off up to 80% of your vehicle's value in the year you purchased it and placed it in service. Now, I know you're probably saying 80%, that's amazing. Y'all, guess what? Last year it was 100%, right? So the Internal Revenue Service every year is going to be taking back how much you can write off under this guideline. And so now this year it has dropped down to 80%, and it's going to continue to drop in the years coming up. So I want to make sure that you hear me and hear me well. All right. Now, there are certain limitations or requirements, I should say, that have to be met in order to take advantage of this bonus depreciation rule. And guess what? EV owners got a little something special for you at the end. Weight does play a factor in how much you can take for this bonus depreciation rule as well. All right. So let's talk about some of the requirements. All right. So if your car was placed in service in the year that you acquired it, that's the first requirement. Okay, your car has to be placed in service in the year that it was required, meaning that you have to start using that car for business related purposes in the year that you purchased it. So I hope that makes sense, but connect with me if you want some more insight on that, or you want me to explain that further. Right, also, your car has to be used for more than 50% of the time for business related purposes, right? So you have to make sure that your car is used for 50% or more than 50% for business related purposes, right? So I want to make sure that I get that right. All right. Now, for my EV owners, if your vehicle is over 6,000 pounds, right, but less than 4,000 pounds, then your depreciation expense is increased. Okay. So there are limitations that they put on the bonus depreciation expense for by weight. So if your car weighs over a certain amount, you actually get more. This also applies for heavy SUVs. Okay. So if your car meets a certain weight requirement, you can actually write off more of the car, right? So that, y'all, is the beauty of tax planning, right? So if you were intrigued by these tax tips, if you learned a lot of information tonight and you want to connect with me to create a personalized tax strategy, then I advise you to visit our website, right? Make sure that you are clicking on that booking link, and you can book a free tax consultation so that we can do a deep dive in some of the areas or concerns that you may have, or areas that you may just want to learn more and see how you can actually save thousands on your tax returns. Everybody wants to keep more money in their pocket. This is how you can do that, right? And so I also encourage you to like, share, subscribe to our YouTube channel, where we're going to be doing this every week. We're going to be bringing you this good, great content every week. I'm going to do my best to slow it down and walk you through the tax code and give you some of the benefits, that you can actually use to leverage and save you thousands of dollars when done right, right? But again, everything that I described tonight, even though you took good notes, I encourage you to connect with a tax professional so that they can tailor something to your specific needs, okay? Everybody is not the same, your situation is not the same, and our goals are definitely not the same. So, although I laid this out as best as possible, there are a lot of information that needs to be discussed when you're trying to do this personally for yourself. So definitely connect with me. All right. So again, Five Finance Family, thank you for tuning in for another episode of the Tax Takeover. I hope y'all have fun. I had fun sharing. So definitely make sure that you are sharing this with someone who you feel like could benefit as well. And until next time, you all have a blessed and prosperous Tuesday evening. See ya.